What rhymes with interest rate hike? How about interest rate spike? Are we at the top of the ladder here in Canada for our interest rates? Is there room to go, or are we going to just hold still and start coming down? These are things that we're going to talk about with a good friend and mortgage broker, Dion Beg. We're also going to jump into, hey, there's a lot of people that have bought new builds, new construction over the last several years, and those properties are going to be closing in the next several months. And what are they going to do about their mortgages? Well, Dion has some solutions for us, so let's jump into it. Yes, my friends, as promised, Dion Beg. And when the news hits the you know what, it's important to talk to our good friends and people that are in the know. And of course, we had our interest rate announcement on July 12th. Today's the 13th if you're watching. And there's a lot going on, Dion. Of course, everyone knows the interest rate hike. We're not breaking news. We're just sharing some insight here is what we're doing today. So what's going on in your world from that perspective?
Yeah, it's just like you wake. It's like Groundhog Day, isn't it? It's like, oh, another rate increase.
Yeah.
Okay, yeah, here we go again. And as I knew I was coming on to be on this podcast with you today, I'm like, okay, well, what's new that I can say? And the truth is, there's really not much, Gary. All the things we've said up until this point are still true. They haven't hit. The government haven't seen the economic indicators that they wanted to see for them to feel that okay, they can tap the brakes or stop these interest rate increases. And it sounds like a broken record on the media. And I'm fearful that if I keep talking about this, I'm just going to sound like a broken record too.
Yeah, exactly. And I know I like jumping into the Twitter world, but you got to be very careful and you got to filter because there's a lot of nonsense and there's a lot of craziness out there. But if we were leading up to this, people leading up to the 12th announcement, people in the know, we'll call it, saw this coming. And yeah, it does sound like a broken record, but we need those fundamentals and the government needs to see some real movement in those inflation numbers. And the crazy part is, as we know, is job loss. And that's always a hard one to comprehend, right? Is we need to see job loss in order for inflation to come down, in order for interest rates to come down, which is kind of wacky if you ask me, but that's just the reality of it, right?
Yeah, it is, and they need a small group of people to feel a lot of pain. Right now, what's happening is everybody's feeling a small amount of pain, and it's not having the impact that it wants. But I will say, one of the economists that I do follow is a guy named Benjamin Tao, who's an economist for the CIBC, and I read some of his articles after the fact yesterday, and he raised some interesting points. One being the fact that the BOC for the first time now said that they don't believe inflation will hit their 2% target until the year 2025. Right. So up until yesterday, it was kind of an up in the air number. Most people in general were hoping for a return to the 2% number sometime in the year 2024 next year. But the fact that they've gone and put their flag out at 2025 could be a bit of a concern, meaning they're saying, okay, we don't see this coming back for another 2 years. And therefore, they're leaving the door open for potential future interest rate increases. And again, in his interpretation, they've left the door open for another increase in September, August being a skip, meaning there's no Bank of Canada meeting in August, the next being in September. But again, it's like, okay, well, if this is what somebody who's in the know, who understands economics maybe a little bit better than you and I, is saying, then maybe we still need to prepare for another rate increase this year.
Yeah. And I know when he puts out information out like that, he's not doing it because he wants the headline or anything like that. You and I have both been following Benjamin Tall for many, many years. He's the gentleman that just tells it like it is, and he doesn't look for that opportunity. He's just reading the data and provides some valuable information. So if you want to read up on some of the articles that he puts out, I highly recommend it. However, here's the good thing. There is some good news that's been coming along and across your desk over the last week or so, and I know many people have been asking online and everywhere else. I bought a brand new condo or a new build, new construction, we'll call it, and they are a little nervous with the financing because of the different valuations and so forth. Because typically when you buy a new build, you're 12 to 24, sometimes 36, or even 60 months out from closing on this. So talk to us, shed some light on the financing world from that perspective.
Yeah, sure. So, oftentimes people will buy these properties 3, 4, 5 years in advance, and then they're coming up to closing now. Their financial circumstances 4 or 5 years ago were a certain position, and now they're at a point where maybe they're not as good as they were 4 or 5 years ago. So we are helping several people in these types of positions at the moment. One interesting solution that some of the lenders have, which not everybody knows about in general public, and certainly the major banks don't offer this solution, and that is that let's say you bought a property years ago on paper for $500,000, and today, because time has passed and appreciation has occurred, it's now worth 700. So 500 now worth 700. Uh, Most major banks will only recognize the 500 value. So the whole world knows you've got $200,000 of extra equity there, but most major banks are only going to lend you based on the 500 value, meaning you might get a mortgage of 400,000, right? And so that's what most people will do. But there are products out there that actually do recognize today's market value of 700,000. And so we recently had a client who came to us with this type of scenario, and he was struggling to come up with the down payment, the extra down payment needed to close the deal. So this lender allowed us to recognize the existing $200,000 equity as the down payment in the purchase. So our client didn't actually need to come up with any extra funds on the day of closing. They actually were able to close, including actually land transfer tax, because there was so much equity there that all of that was recognized, and the lender was able to lend. So for those of you who might be struggling with down payment, that's certainly something to potentially explore.
Yeah, no, that's good. And I always say, if you're not getting, most people, I shouldn't say most people, there are people that will go to, say, the big banks of the world, or where they bank, and that's where they go get their mortgage, and usually they're not asking the right questions. And that's why it's important to talk to people like Dion, because Dion gets to see a broader scope and gets to look at different products from all different lenders. But also, your experience knows that you need to ask different questions, right? And that's a big part of the experience that you bring to the table.
Well, yeah, this is just in general pre-construction or anything, any type of purchase. There's more than one occasion every single month where a client's come to us saying they've been told no by their bank, and we take that same client potentially to a different bank, and in some instances directly back to the bank that said no, just positioned in the way that the underwriters will understand, the information, and we get that same client approved. In fact, one of my clients worked at one of those banks,
Oh my
got
gosh.
declined by that bank, and then we got him approved right back at his own bank where he worked, right? And it's just because the people at the branch where he worked didn't understand how to package the deal so that underwriting, which happens downtown Toronto, that the underwriters would have been able to approve the deal in a way that it checked all the boxes. So it is all possible, right?
Yeah, yeah, and that's important too. And that's just that's based on experience and knowing how to set that up. And we talk about presenting the deal, and this, people come to you with, with no properties as a first time home buyer, to many properties like myself, and we just can't submit paperwork and hope for the best. That's not how this works, right?
Correct, correct. And it comes down to pattern recognition, right? And you do this in your business every day too. Like, I got a client with this problem, and for this client, this problem is huge. It's the only time they've ever had to deal with that problem. But I've dealt with that problem probably 20 times last week or 100 times over the last couple of years. And so when it comes to us, we're like, okay, we know how to solve this, where it fits in the puzzle, and solve the problem by just moving it forward in that direction. But Gary, just before I forget, I want to talk about some other things regarding pre-construction.
Yeah.
Have you sold some of your clients pre-construction, or that? clients have bought pre-construction over the years?
They have over the years. Now, I haven't done that in a little while, but we do it. We do pre-construction, whether it's condos or so forth. Yeah, everything like that.
For sure. Okay. So some things that again we've noticed, again, pattern recognition, we've noticed that over the years builders have always seemed to delay and delay and delay these closings. Something that was supposed to close in the year 2021 might only be closing now in the year 2023. And it's written into the contract that the builder is allowed to delay for certain periods of time, but they seem to be taking it all the way to their limit at the moment. Now, the flip side of that is our clients, or your clients, people who ultimately need to close on these purchases, I've been told by the builder, delay, delay, delay. And then one day they'll get a letter in the mail, or their lawyer who's representing gets a letter and says, okay, we've got to close in 2 weeks from today. Right. And so something that was this dragged out process now suddenly becomes this super stressful period of time in buyers' lives. Have any of your clients expressed that they've had that type of experience?
That has come up. Yeah, we see that. We see that. And it's unexpected usually, right?
Correct, correct. So my message to, and by the way, we deal with these every day and we get them done and closed on time. But the way to deal with this is if you've got a pre-construction that's potentially closing in the next month or next year, what you should do right now is get your documents in a row, like lined up right now, income and everything squared away, so that when you get that letter, when it's dropped on you, you're not starting from behind the starting line. You're already halfway down the track, and all we really need to get done is the appraisal on the property, as long as all your other documents are good. And you must have a very good lawyer, a cooperative lawyer who can jump into action. And I will tell you that I've had to tell clients to change their lawyers,
Mm.
because the lawyer, in our very first interaction with the lawyer, we knew this guy was dragging his feet and there's no way he was going to close it on time. And we transfer them to a group of our lawyers that we trust who know can close it on time. So it just comes down to working with that bigger team and being prepared for when that thing gets dropped on you.
Yeah, exactly. Exactly. And there's also the element of, and especially in the condo world, of having, closing on the property, or meaning getting access to that property before closing on it. And oh my gosh, the term escapes me right now. The interim occupancy, right? And which means you get the keys, but you don't own that property for another, several months in some cases. And
That's a huge point of confusion for a lot of people as well.
yeah.
They don't really understand that. So, yeah, why don't you explain like what that means? Because most people don't know.
Yeah, well, the intern occupancy basically means your condo unit. We'll use condos as an example. Your condo unit is ready, and you're going to get the keys. And what happens is the entire building is not ready to be handed over to all the owners at the same time. So they do it kind of one at a time. And in some cases, I know when we bought our first townhouse condo, which was a condo, we were very fortunate. It was only about 3 months after that we took possession of the condo did it get registered, and that meant at that time when it was registered, that's when our mortgage started. So
Mm,
in the time that you take occupancy to the time that it closes, you're paying the builder a
mm.
lease payment, right? And
Yeah,
and and
occupancy fee.
as yeah, occupancy fee. And as you know, Dion, sometimes that can be 12, 24 months. In some cases, it's longer than that, heaven forbid. And all you're doing is paying a lease payment every single month. Your mortgage hasn't started until that whole entire building, we call it, being registered with the city. And that can change a financial outlook on a lot of people if they're not prepared for that.
Oh yeah, and that's caused a bunch of issues. Some builders do allow the property to be rented during that period of time, but
Yeah.
again, you've got to choose your contract. Your lawyer will help you with that. And if you're going to be buying a pre-construction, make sure that you read those clauses so that you know, okay, can I rent the property during occupancy? Make sure that that's allowable. If that's something that's going to help you with that cash flow. But I will say this too: if you get your notice of occupancy, it means that your actual firm closing date, the day you need to get your mortgage by, might be within the next 2 weeks, or it might be in the next 2 to 6 months in most cases. But the day you get that, guys, that's when you really should be talking to a mortgage professional if you haven't already, because that's the first sort of green light to say you better get on this right now.
Yeah, and to provide some clarity on it, this is only for condo units. This freehold is when you close on the property, you close on the property, you own that property in day one. This is just for condos, condo townhouses, or high rise, whatever that looks like. That's where this conversation. That's where you need to be educated on this conversation. Yeah, very good. So lots of things happening. We're going to keep our eye on, what's going on with the different products that the banks are offering. I know we should probably talk about this a little bit. The and this is more out of curiosity, Dion. As the interest rates go up, as all lenders, not just banks, all lenders are perhaps writing less mortgages. Here's my question. Do you see some of the banks or lenders getting a little bit more creative or what they're able to offer their clients in a new mortgage? Because they're good at now, just like everyone else, they're fighting for business in a sense, right?
Yeah, it's true, Gary, but I haven't seen anybody relaxing guidelines or making things easier. In fact, we've noticed with some lenders, they're going in the other direction, where they're being
Interesting.
a lot more prudent with reviewing files. And I guess if you think about it, they have guidelines in certain numbers, and they will oftentimes make exceptions to, say, total debt service percentages. They go, okay, you're just a little bit over, we'll let that slide, right? And what if I'm a CEO of a major bank today in this environment where we're approving mortgages and we've got people right at that upper limit? I don't think I'd be inclined to say, you know what, let's let it slide. If we believe that yes, interest rates are going to increase, that unemployment may in fact increase, then that's probably not the risk that a prudent CEO will want to take on in this type of environment. They want to, as much as they want more business, nobody wants to be taking on potential bad debt or
Right.
future bad or future defaults. Now, again, I'm not a doomsdayer, but I can understand why they're not making things easier. They are, in fact, more stringent.
Yeah, yeah, that's a good point. And do you see banks offering different perks in a sense? Maybe a low interest rate credit card for X amount of time, or the flashy thing. I don't have my iPad here, but you see that from time to time. Come to us or transfer to us. We'll give you a free iPad and all that. So do you see gimmick things like that happening, or
Yeah, but one thing that a couple of major banks do is they, at the time of closing, if you open a bank account with that bank, they may end up giving you some cash back or a better interest rate. And the reasoning behind that, Gary, is if let's say you're going to go buy a property, you bank with the blue bank, and your mortgage we're getting with the red bank. Okay, and the red bank would like for you to start putting your income deposits and other things with them, in addition
sure,
to the mortgage that you're getting. So the reason that they're doing that is because once a person sets up an account at a bank, they often do direct their income there. And what happens is the bank now actually gets their hands on deposits. They have capital. And once they have capital, and let's say that capital reaches $10 million, then because now they've got $10 million worth of extra capital, they can go and lend potentially $100 million in mortgage funding, right, under fractional reserve lending. So it's yes, there are incentives. The incentives are to help their business on the lending side.
right? Interesting. Good stuff. Good stuff. So there you have it, my friends. No interest rate announcement coming in August, which is perhaps a good thing. We need a little break. The next one in September, but over the summer months, Dean and I are going to keep our ears to the ground, and there's many other ways to look at this because there's different products that Dion has access to, and of course, the different experiences and the clients that he's helping, just like with that condo closing. It's important for us to share these stories because it might enlighten you or give you an idea, the viewer, give you an idea of how to close on a property or perhaps take advantage of an opportunity. So, Dion, remind us how to get a hold of you.
Yeah, mortgagesbydion.com. Just look us up online.
There you have it, my friend. So, for Dion Beg, I'm Gary McGowan. We'll see everybody in the next video. Goodbye for now. Excellent.